Welcome back. I'm Daren Blonski with Sonoma Brain Trust. We are missing one of our co-hosts today. She is out and about. It is Prop 19 day, meaning that a lot of people are down at the recorder's office rushing to get their properties set up because of Prop 19 to mitigate some future tax damage. So Chelsea Rhines and I from Better Home and Gardens, I'm with Sonoma Wealth Advisors. We're going to talk a little bit today about real estate, dive in maybe a little bit deeper than perhaps we usually do, talk a little bit about the markets and what's going on in the markets, and go from there. Thanks again for joining us. So Chelsea, tell us what's going on in the real estate market, because it just continues to we see strength, but we've seen some shifts too.
Yeah, so the real estate market, it is doing stronger than normal. We're only in February, but it's doing stronger than normal for this time of year. And although the buyer demand is strong and it's been severely restricted by the lack of inventory, we are seeing more inventory. Sellers are feeling confident now because we have the vaccine rollout, the economy recovery. There's just a lot of positives happening right now, and that's really boosting seller confidence. And so we are seeing that trickle over into real estate, and we're seeing a jump in inventory. For example, last week in Sonoma County, we had 444 available listings, and as of today, we have 552 available listings. So wow. That's like a 22% increase in inventory over a week for the county. Not to say that sell prices are going to decrease. We're going to continue to have an uptick in sales prices, and the prices are going to stay up because the pent-up demand that we've had for so long, even though we're seeing an increase in inventory, it's still not enough to adequately make up for the pent-up demand. And interest rates are staying low. We're still near historic lows, which is going to keep those buyers out there and keep them strong. We did see a slight increase in interest rates over the last couple of weeks, but that was mostly due to concern of inflation happening more rapidly than what we would like to see. But now that the talks have kind of died down, interest rates have leveled out again, still at historic lows. And even through the year, they'll likely stick around 3%. So that'll keep the buyer market strong. And with spring coming and this seller confidence, we'll start to see a little bit more inventory. So all positive things on the side of real estate. One thing is, although we have that buyer demand, we are not seeing those overbidding or bidding wars that we were seeing last year. Last year, people were just overbidding each other like crazy. This year, houses are still selling at or above their list price, but you're not seeing that crazy 15 offer bidding war happening anymore. And that's just because buyers they're not in the position of where they need to find a place right now. They're being a little more methodical with the houses that they're buying. So it is very important to price your properties well still.
Yeah, it kind of feels like there's that initial rush after COVID is kind of the migration out of the cities, right? And that kind of panic sort of feeling has died down. People are realizing that there's going to be vaccines and that these might work. And so you have people perhaps migrating and moving, but people who can do it in a more methodical, more judicious way than perhaps we were seeing last spring.
Yeah, they're not
running. Does that kind of resonate with some of the buyers you're seeing?
Yeah, they're less of a fear mentality is what we're seeing right now. I think last year, a lot of what we were seeing was based on fear and fearful emotions and that knee-jerk reaction to go out and do that. And we're starting to see that die down more.
Yeah, that makes sense. I mean, and it's funny because that kind of laps over with what we see in the market. We look at a lot of different indicators when it comes to looking at greed and fear index. And we just are not seeing a lot of fear in the market. We're seeing exuberance. We're seeing this kind of penny stock gambling going on that we've seen with AMC kind of short squeezing and GameStop short squeezes, plus all this other penny stock buying, which is actually very late stage behavior on an economic cycle. So that does bring some concern. I also wonder what will happen when they lift the moratorium on foreclosures and how that will impact the real estate market. Secondly, I wonder if there will start being more political pressure to lift those moratorium on foreclosures just because there's such a lack of inventory out there. And people are saying, well, look, we got to let this market get back to, more capitalistic, I guess, in some ways.
I know people think there's going to be this big housing bust, or, this bubble's going to burst and all these houses are going to come up for foreclosure, but we're in a different landscape than we were in 2008, 2009. There's not those horrendous loans that were given out. And a lot of people have much more equity in their house now than they did back then. So, I mean, I don't have a crystal ball, so I can't say for sure, but I definitely don't think we're going to have this huge foreclosure bubble coming and there's going to be a bunch of short sales and foreclosures hitting the markets.
Yeah, I agree with you, Chelsea. I don't see that. I even think people have gotten in trouble during COVID and who have perhaps used the moratorium on foreclosures. They'll work their way out of the hole. My sense is there's certainly there's a bifurcation in the recovery that came out of COVID. Those who have generally have more than they had, and those who didn't have less, and that there are a lot more struggles there. I would say generally in the Bay Area, though, a lot of people were really struggling have now migrated out of here in a lot of ways, used COVID as that opportunity. I think that's a generalization, but I don't see the same kind of pressure like perhaps that we saw during the real estate debacle in 2008, 2009. I don't think people are as exposed as they used to be.
I think what we're going to see is we're going to see Prop 19. I think we're going to really see something play out with that. I mean, how many people actually got in and made the transfers before today's deadline that'll be interesting. But I think as people start to realize that they have multiple homes that they're going to transfer over to their children, and their children are going to have massive amounts of property taxes they're going to have to pay now, I think that that's the thing to watch out for. See how many houses are on the market because of that.
I'd be really surprised if there was a big initiative to roll that back. I just think once people really realize what that did and what that will do to their children or the people they want to give their property to, they're not going to be happy campers. However, it's actually kind of genius the way that whole Proposition 19 was written, because it'll impact people very slowly over time, right? So you don't really realize how big of an issue it is until it's an issue. And oops, mom and dad already died and here's the house. And guess what? Now your taxes have tripled on the house. Nothing you can do about it at that point, right? So it will be surprising if there's enough momentum behind shifting back on Proposition 19. I would be surprised if it does get enough momentum, but I do think there's going to be an initiative to say, wait a sec, this was we're really making it tough role, and it's going to impact towns like Sonoma much more than it's going to impact, maybe say, a commuter town, right? But there's still a good chunk of the valley's retired, own their homes, Prop 13 taxes, only can afford it because of the Prop 13 tax situation, and then their kids inherit it, and are they really going to want to hold on to it with 3 times the tax liability?
I mean, especially because they're priced on market value, and as these prices keep going up, that market value, that date of death market value is going to keep going up. And I talk to sellers all the time who they're like, oh, I've got 4 houses and I'm just going to leave them to my kids. And I'm like, oh, we should really, not to push you to sell your house, but we should really reconsider another plan, because I don't know. I don't think that they are aware of what they're leaving to their kids, actually.
It's interesting because there's a whole generation, certainly, of people in Sonoma and in other communities like Sonoma where a lot of wealth was created by the parents who bought homes and they sacrificed and they bought different real estate properties and then were able to pass them to the baby boomer generation. But basically that can't happen anymore, and it's not going to make sense. Well, I mean, what are you going to do? Pass the house and then rent it for $1,000 more per month in rent? Because in a lot of times, that's a lot of the analysis I've done. It's basically going to increase taxes by at least $1,000 a month. And on a normal home, like, that's just not reasonable to be able to pass that through eventually.
I know this is more for a Mary thing, but with the new, the Sonoma County ordinance or ban on evictions and rent increases that they just even put even further, imagine somebody's parents have passed away and now they inherit this home, and now they're going to have these increased property taxes, and they can't increase for the rent. They can't kick the people out. And now I think there's even an issue of kicking people out to sell the real estate.
Yeah, that's a great question for Mary, but what a conundrum, right?
Yeah. I mean, people are really going to be up a creek.
Yeah, I think that's going to be a challenge. And I think about all the landlords right now that aren't getting rents, that are just hanging on because these moratoriums, and it's going to have to unwind pretty quickly here, because I don't know how much more solvent landlords can stay. And then especially if they can't kick people out even to sell, like that's just, I don't know. It's a interesting time out there to be in the real estate business. I know at one point in my life, my goal was just to, accumulate real estate properties and then use them as rentals. And, when you run the numbers nowadays, they can be okay investments, but with all the rules coming into place and the challenges with taxes, it's, a true real, what we call the internal rate of return in the investment world. It's not as good as it was certainly in my parents' generation or the generation prior. It's much more challenged. It can be okay, but you gotta really be careful. And what's the old saying in real estate? You make the money on the buy, not on the sell.
Mm-hmm. Maybe people need to start looking into Dogecoin.
Yeah,
start looking at Dogecoin.
Yeah. Well, so Dogecoin's this funny thing, right? Because Elon Musk has been pushing it. Bitcoin itself, it looks like we might hit $50,000 a coin today. We'll see if that happens. But Dogecoin was literally meant to be this joke. And the creator of Dogecoin he built it like a just complete joke, but it kind of caught on to this millennial rave, like you need a doggy coin, and now it's worth, I think, 7 cents a coin right now. It's, I was looking at the numbers yesterday on it, and it's 66.9 cents right now. But if you look at what it's done since the beginning of February, it's up just from February 1st, 808%. I mean, it's just crazy. So, it's one of those things like, it's fun, I guess. But it's kind of like all the Robinhood stocks. I get daily text messages from people that are like, "Hey, Blonski, what do you think about this one?" I'm like, "Well, I'll call you, buddy. I can't text you on it." But it's, there's a lot of people playing the stocks, and that's what I'm saying. That's a very late cycle, late stage game. There's so many more kind of day traders in the markets than there ever has been. I think it's really changing the dynamics of the markets in general.
A lot of fun stuff happening right now, I think. A lot of interesting stuff.
Totally. It's a good time to be alive. There's a lot of change. I was talking with my partner, Chris, earlier today, and you think about the shifts that are happening right now from, Bitcoin, and the other big one as of the past couple of days, marijuana stocks are just through the roof and they're ripping. All these things that were very taboo in a way to the baby boomer culture are now coming into the forefront with the millennial culture, and the Xers are kind of caught in the middle a little bit. And it's interesting. There's definitely some shifts going on. There's a book out there called The Fourth Turning, where they talk all about these like paramount, these kind of important times, and there's these stages culturally. And the argument is that we're going through this fourth turning period. Very scary, though, with fourth turnings is there tends to be both civil wars and foreign wars during fourth turnings historically in the United States. So let's hope we can make it through this fourth turning without any of that. But certainly we're in times of change. These will be times we look back on, and there'll be a lot to say.
That's true.
Well, that's all I've got today. Anything else you got, Chelsea?
That's all I've got. I think real estate's going to be a bright spot in the next couple of weeks. So stay tuned and come back for our updates on real estate and finance. And I think Mary's going to have a lot of really interesting updates in the next couple of weeks as well in the legal world.
Absolutely. Thanks a lot, Chelsea. Take care.
Bye, guys.